And let's talk a bit about this market rally. A lot of people are getting really excited. We've seen the market up about 30% year to date. But for me, the key signal that we've turned the corner totally is when we begin to see primary offerings in the market. Your thoughts on when that is likely to be?
Well, I guess I'll just say I'm hoping, Wole. But you want to look at what has happened this year, right? In fact, the end of the year, the corporate actions are the sort of, it meets the expectations of portfolio managers in terms of dividends. Then I can start saying probably that there's some cash to plow back into the market. I believe the best or top performers will first of all test the primary market by offering rights issues. If existing shareholders, based on the returns that have been received, show their confidence in their companies, then you probably find the companies actually doing offers for subscription and testing those shareholders that are out of their books. I think that's what's going to happen. Rights issues first and public offers. I will probably start seeing this by the time market performance in the first quarter of next year is available for everyone to see.
All right, so the market was up again yesterday, as it seems to be the trend these days. And of course, yesterday we did have the president present the budget to the National Assembly. What are the key takeaways for you for the capital market? The things that he discussed, of course, a lot was said about fiscal consolidation, etc. But for the capital market, we do have a lot of talk about a bond issue for the government, reducing the deficit, reducing borrowing. What does all of this mean for the capital market in your view?
Well, it's an interesting budget. So far, there's still a lot in the details, you know, our analysts are looking at. But from a top-level view, clearly there's an impetus to encourage fixed investment, okay? You've got concessions on tax, on duty being offered to attract foreign direct investments. And one would expect that if this starts to translate in terms of whether it's going to be in infrastructure, you've got the zero duty on machinery and spare parts, we start to see refineries, there's going to be need to get some local capital. Yes, some local debt and some local capital. And perhaps the best place to go in terms of organized and formal local capital raising is the Nigerian Stock Exchange, Nigerian capital market. One would expect to see, and with the current degree of sophistication we have around, one would expect to see some of that local capital required being raised on the market.
All right, let's move back to the market performance. The insurance sector, we're beginning to see some interest. I know this is a sector you've been calling for a while. We're beginning to see a lot more activity there right now. Your thoughts on the potential for M&A transactions in that space? Because like I mentioned to Mukhtar earlier, we are seeing a lot of distressed valuations in this market.
Yeah, the potential still remains. It's large, and I think once returns in terms of cash start going back to portfolio investors, it's likely that the attention being received now will translate into actual investment. It's a largely untapped market. It remains so. And I think for those foreign players who might want an in into a large retail insurance space, those companies are pretty much undercapitalized, undervalued, and they're the sort of companies that should attract that kind of attention. But I think we're going to see something happening in there in the months ahead.
All right, the final word from you. We know that there are some local players looking to do some deals. Do you anticipate any deals from foreign investors? Are you hearing anything about that?
Well, there are feelers, as there always are. You want to remember that quite a few insurance companies, or at least the top players in the insurance industry, the names we've known for quite a while, are shareholders in either pension fund custodians or pension fund administrators, mostly in the pension fund administration industry. So there's an ad hoc, almost auxiliary type of a business that's available there. And I'll always say that still makes that sector attractive. It's just about getting the linkages, getting the right model, and knowing how to tap in. So the feelers are out there offshore looking in here with much more stability, with all kinds of the tax incentives, for instance, the concessions. That's what the investors are going to look at, and that's what's going to make them come in.